Hello, dear friends. My name is Clive Thompson. Today is Thursday. I bet you wish it was Friday. But hey, another day, another dollar. It's the 21st of August, 2025. I'm here to tell you the latest financial and economic news from last night and this morning. We didn't see very much change in the headline indices on Wall Street last night. The S&P 500 it fell 0.25%. The Nasdaq index fell just over 0.5%. Not a very big change, but underneath that index we could see some sector rotation. The large cap, mostly technology sector stocks, were broadly in the red. Red means they went down, and they went down by more than the market. So across the board, we saw large companies with their share price falling. Good examples, for example, Apple fell nearly 2%, Amazon down nearly 2%, Tesla down nearly 2%. And there were some bigger fallers like Dell, which was down nearly 5%, Adobe down 2.1%, and so on. Palantir was down 1.1%. So red in the technology arena, but another part of my screen shows green, and that's the pharmaceutical and healthcare sector and the consumer defensive sector, also the energy sectors. So in these areas, we broadly saw rising stocks, companies like AbbVie up 1.44%, Boston Scientific up 2.22%, Walmart up 1.26%. Look at some of these others. ExxonMobil up 1.03%. So there were quite a few companies which rose in price outside of the technology arena. The main news today will be about what's going on at Jackson Hole. So today we have the 2025 Jackson Hole Economic Policy Symposium. And that's going to run through to Saturday at Jackson Hole in Wyoming. This is an event hosted by the Federal Reserve Bank of Kansas City, and it brings together central bankers, policymakers, and economists from around the world to discuss key economic issues. And the theme this year will be labor markets in transition. Demographics, productivity, and macroeconomic policy. Well, if that sounds like a lot of gobbledygook to you, I think what they'll really be talking about is the state of the labour markets and what's really going on. We've seen some pretty awful numbers in the USA, and that could be replicated in other markets around the world where we see less new jobs and more unemployment. Which would be signalling, perhaps, that we're going into recession. But of course, they'll be discussing other aspects of the labour markets, such as the ageing population, the declining birth rates, and advancements in artificial intelligence, which are destined to put large numbers of people out of work over the next 5 years. I was just talking with somebody this morning who's drafting some legal documents, or he's having his interns draft the legal documents. But pretty soon he won't need those interns, or won't need as many of them. He'll, instead of having 5 or 10 interns to draft these documents, he'll have one who can use artificial intelligence powerfully and do the work of 10 others. So the number of people in offices are going to decline, and whether they'll find alternative things to do, I don't know. But certainly that could be a topic of discussion at the Jackson Hole Economic Policy Symposium starting today. Now, the big event will be the speech by Jerome Powell. Now, that's coming, they say, that will be coming at 4 p.m. or 1600 hours Central European time, which is where I am in Switzerland. That Eastern time, that means it'll be at 10 a.m. and if you're on Mountain time, it'll be at 8 a.m. Jerome Powell's remarks might move the market. Now, historically, he's been very adept at telling the market what they're expecting to hear from him, which probably means he won't move the market. But obviously what the whole world is waiting for are further insights on the Fed's policy direction regarding potential interest rate adjustments in response to the latest economic conditions, i.e. greater unemployment, falling or not as much new employment. And of course we had the producer price index last week increasing by 0.9%. That's an annualized rate of more than 10%. And the producer price index usually feeds through to the inflation numbers down the line. And of course, before the next FOMC meeting in the middle of September, we will have one set of consumer price index and numbers in the United States. So I don't know what he will say, but that's the speech tomorrow. Probably he'll say something along the lines of it's going to be data dependent, which is what he says every time. But I guess we're going to have to read between the lines to see if the direction of travel is one towards cutting rates. We do know that out of the 7-man Board of Governors who will be at the FOMC, he's had at the last meeting 2 dissenters, and since then one other member of the FOMC has resigned. She resigned early without giving much of a reason. She basically said she wants to go back to academia, and she resigned 5 months before her term was up. Draw your own conclusions on that one, I think. I'm not sure that the words used about her reason for resigning were absolutely the honest to goodness truth, but they were the right words to use to not panic the market. So she's been replaced by somebody very much on Trump's camp who is going to call for a lower interest rate. So we've got 3 people calling for lower interest rates. We've had the bad labour news. We've had the higher inflation news. It's almost certain in my mind that they'll cut the interest rates, and the FedWatch tool is showing that as the likelihood. It's showing an 87% chance, or 83% chance. Let me just check that. It's showing 83% chance of the rates being cut in September, so about 16% chance that they won't be cut. So market's almost a dead cert at this point, but that could change depending on the words used by Jerome Powell. Of course, the problem we've got, or he will have, is what if those inflation numbers, which are due before the next FOMC meeting, come out, show a strong rise in inflation? What's he going to favour? Is he going to favour the labour markets, or is he going to favour the trying to get inflation round? So to favour the labour markets, you want to be reducing rates, which is where the probability lies at the moment. But if you want to stop inflation, probably he wants to be keeping rates where they are, or even raising them. There's no chance of them being raised, by the way. A little bit of news last night. Meta said it was going to freeze hiring in the AI sector of the market. Meta shares were down a little bit on that news. I don't know if that was before or after the market closed. And gold price today, just looking at my screen, it's showing $3,344.42. Virtually no change from yesterday. Other precious metals not changed either. On the interest rate front, we're seeing that the bond yields are down a little bit across the board, except for the UK, which, despite some relatively good news on the borrowing front, they're borrowing less than usual this month. Despite that, the 10-year yield is rising. It's at 4.74%. So my name is Clive Thompson. If you like what you're hearing and you'd like to hear this regularly, please please subscribe. I'm happy to, if you've got a like, and of course if you want to tell me anything or ask me anything in the comments, I'll try and answer some of the comments in the next few hours. Thank you very much, everybody, and have a great day, and speak to you tomorrow on Friday.